the Federated Retirement and Health Care Trust Board meeting of June 16th, 2022. So we will have a roll call of the trustees. And I will start with Trustee Chandra. Okay, Trustee Chandra is not here yet, but I believe he will be coming. Trustee Orr.
Here.
Trustee Kelleher. Okay, hopefully he'll be coming soon too. Trustee Linder.
Here.
Trustee Avasti.
Here.
And I am Vice Chair Jennings. I am here too. So that is, well, and Chair Horowitz is not here. That's why I'm acting as chair. So we have 4 people, 4 trustees. That's enough? Yes, okay. All right, so that's good. Okay, we have quorum. I would like to remind attendees that all chatter can be heard by the public, and remind all speakers to speak clearly, state their names for the record and the audio recording. Let's see. So we, I believe the first order of business is, I believe, a closed session item. So we will be going into closed session and then resume the open session after we complete that. So we'll just ask for your patience as we are being led into the breakout room one at a time. And if anyone else needs to share their screen in closed session, please let staff know before going into the breakout room so staff can make you a co-host. This will take a few minutes. Thank you, and we appreciate your patience. So we do have trustee Chandra now, and we do have trustee Kelleher. So,
Yeah. I'm here.
yeah, just to note that. All right, so there is no reportable action from from the closed action, I guess. So now we'll, all right, so we have a few ground rules for this meeting. We are continuing to meet virtually at this meeting and are doing so pursuant to AB 361. As such, all votes will be roll call votes. If you are not speaking, please be on mute to cut background noise. For discussion items, each trustee will have a turn to speak in roll call order more than once if desired. The public will have an opportunity to speak on each item after trustees. The public will also have an opportunity to speak at the beginning of the meeting after the orders of the day and waiving sunshine on any other item not on the agenda that is within the subject jurisdiction of the board. And there will be a 3-minute time. Okay, so the orders of the day, we will have a break. I assume we can do a break, 5-minute break at 9:55 a.m. I know that Roberto has a hard stop, I believe, at I think it was 11:30. And we will see if we can stay on task here. So may we have a motion to accept the orders of the day?
So motioned. Trustee Kelleher.
Trustee Kelleher, so
Trustee
motion.
Chandra, I'll second.
Trustee Chandra seconded. We will now have a roll call vote. So trustee trustee Chandra,
Aye.
trustee Orr,
Aye.
trustee Kelleher,
Aye.
trustee Linder,
Aye.
trustee Avasti,
Aye.
and I also vote aye. That is unanimous, and we are all voting in favor of that motion.
Excuse me, Vice Chair Jennings,
Yeah,
there is a hand up by
I know,
Brad.
that
I
will
don't know
be-
if you want to wait.
no, that will be after we do the orders of the day and the sunshine, bathing sunshine.
Okay, thank you.
You're welcome. So now, do we need to waive sunshine on any other items other than item 1.3A, which is approval of the board minutes of May 19, 2022? Okay, don't hear anything. So may I have a motion to waive sunshine on the attachment for item 3A?
So moved.
Trustee Linder makes motion. Do I have a second?
I'll second that. Trustee Kelleher.
Trustee Keller seconds. Okay, we'll have a roll call vote. Trustee Chandra,
Aye.
trustee Orr,
Aye.
trustee Kelleher,
Aye.
trustee Linder,
Aye.
trustee Avasti,
Aye.
and I also vote aye. We have a unanimous, the motion carries unanimously with all boards voting in favor. All right, so we will, at this time, members of the public may comment on items not included on the agenda, provided that the matter is within the subject matter jurisdiction of the board. Members of the public who wish to comment at this time may do so by raising your hand in the Zoom app or joining by telephone by pressing the *9 on your telephone keypad. When addressing the board, press *6 to unmute or mute. Please state your name for the record prior to providing your comments. Speakers will be limited to 3 minutes. In addition, public comment on items listed on this agenda will be taken at the time the item is addressed. So I believe we have one hand raised by Brad. Brad, do you want to speak?
Thank you, Madam Vice Chair. Thank you so much for giving me this opportunity. I'll make it very quick because I know I only have 3 minutes. But I wanted to set the record straight from a comment that I made at the last meeting. I want to offer my apologies. This is regarding a request from Mr. Polani regarding the Federated Fund and the performance. I happened to look into my spam email box, which I rarely do, by the way, and I did find a response from Polani in a very timely manner. Thank you so much. And I just wanted to set the record straight that I did misspeak at that time. So in addition, I am putting out my invitation to all trustees to meet with them individually. I know I got an email back from Mr. Pena saying that he was concerned about a Brown Act. Just to remind you, I was on the board for 12 years. I was also chair of the board. I'm well aware of the Brown Act. There is not going to be any violation of any Brown Act. I don't think you know what the subject would be. You assumed that we were going to be discussing investment performance issues, but I just want to caution you on assuming what the discussions will be. And again, I want to give out that invitation. I want it for the record because people did not remember that I had given this invitation to the trustees. I would like to meet, if it's possible, to meet with you individually. I'd like to get to know you better. And also, if Madam Vice Chair, if you will allow the individual trustees to answer this question that I have. The question is to them, what motivated you to want to be a member of the Federated Retirement Board? And also, do you feel, as a result of your participation, that the fund is in a better position now than it was when you first were appointed? So, Madam Chair, if you can have, again, each individual board member answer that multifaceted question, I would appreciate that. And thank you so much for the time.
Madam Chair, I would advise that the question is out of order for responses from individual trustees at this time.
Right. So that item is not currently on the agenda, and I can take it under advisement that you might like to have that included, and we will consider that for the future, but it is not part of the agenda now, so we will.
Well,
move
Madam Chair,
forward.
excuse me, Madam Chair.
I guess you have 30 seconds more.
Thank you. This form of communication is extremely awkward. It's a unilateral. It's very bizarre, and it only will enhance people's distrust of how the board is being managed. So again, this is extremely awkward, and I believe your counsel is out of order. This is not something. It's a very simple question that board members can ask. I mean, can answer. So again, I do not agree with your counsel. And in fact, I encourage that you get conflicts counsel for situations such as these.
Okay.
Thank you so much.
Thank you very much. Okay, so now as we move forward into the agenda, may we have a moment of silence to recognize those who have served the city and its residents. Okay, thank you.
Madam Chair,
Yes.
I think we may have skipped over the consent calendar, item 1.
We did the orders of the day. Okay, let's see.
So after public comments, Madam Chair,
Yeah,
we go to the consent calendar.
okay. All right.
Which, members of the public and the board get the chance to pull any items or otherwise make a motion for the full consent calendar.
Okay. So are there any items that anyone would like to pull or on the consent calendar? I hear none. So I assume we make a motion to approve it now.
Correct.
All right, thank you. Was checking my notes and I didn't see it on my notes. So may we have a motion to accept the consent calendar?
Trustee Kelleher, so motions.
Yeah, and
Okay.
trustee Chandra seconds.
Okay, so now a roll call vote. Trustee Chandra,
Aye.
trustee Orr,
Aye.
trustee Kelleher,
Aye.
trustee Linder,
Aye.
trustee Avasti,
Aye.
and I also vote aye. It is a unanimous motion to carries to accept the consent calendar. All right. So now we move forward on to item number 3 on the agenda. So we will have an oral update by CIO Polani. Mr. Polani, are you ready?
Yes, thank you, Madam Chairperson. Good morning, trustees. I do want to share, as I always do, pro forma performance from Makita. This is as of a couple of days ago. The Federated plan was down 5.8% for the fiscal year through Tuesday. And the Healthcare Trust was down 11%. Now, you will have Makita and Neuberger Berman presenting first quarter performance and discussion around that later. And you will see that as of March 31st, the plans were up 2%, around 2%, and now already down almost 6%. And that's how swift the market decline has been. In fact, as of today, we're having another meltdown in the market. The S&P is off 24% from its recent high, which was, I believe, early January. I would also like to remind trustees that, there have been other such instances in the past. In fact, 13 bear markets going back the last 100 years. And the average drawdown was 36%. And so we're at 24% now. And even to hit the average, we have another 12% drawdown left.
CIO Polani, that 30-odd%, that would include the depression where it was off 86%?
That's right. It does include the Great Depression. Yes.
Yeah.
And
That was
I would.
That was,
Sorry, go-
how much was that? 84% or something? Great Depression?
Yes.
Something.
86, 84, something like that.
86, wow.
Yeah. Well, just to put things in perspective, thank you. It's important because history can repeat itself. But also to remind trustees that in the year, both in the last two big drawdowns, of course, we had a swift drawdown in March 2020, but prior to that, in the great financial crisis of 2008, 2009, and in the dot-com bubble is 1999, 2000, the market actually fell close to 50% in those drawdowns. So just to keep those numbers in mind, and also to put this in perspective, the markets have recovered from every steep drawdown in the past century. And the market has survived recessions. The market has survived 2 world wars and all kinds of issues. So that is also something that we should bear in mind. In fact, when we had those stellar numbers a year or year and a half ago, I did mention to the board that in a way we were borrowing from the future, and the future is here now. Now, what are we going to do about it is a good question. The good news is we are long-term investors. We can stomach volatility. One of the reasons why we've set our asset allocation as it is currently is we've taken that 12% risk number that Veris provided us after talking to our stakeholders. So that's the maximum amount of risk and pain that our that our stakeholders can take, our sponsor can take. So this is within that, within those parameters. Now, occasionally you will have a 2 or 3 standard deviation event, which can cause a lot of pain to stakeholders, to our sponsor. And so, in fact, staff has come up with some proposals, which we will be discussing at the IC next week for hedging the portfolio against further declines. Of course, those kinds of hedges come at a cost. So when it's like buying insurance. And so that's a trade-off. And those are decisions that we will make. We'll hopefully have a robust discussion at the IC next week. And I will take the advice of IC members as we plan for the future. With that, Madam Chairwoman, I'm happy to take any questions before moving on to items 3B to 3E.
Does anybody have any questions?
Yeah, Vice Chair Jennings, this is Trustee Chandra. I had a quick question. Oh, maybe the answer won't be quick, but the question itself is quick. CIO Polani, I usually ask these questions at IC, but I won't remember a week from now, so I hope you'll indulge me. I don't know if this is true. I'm looking to you. I read, someone sent me a note whom I respect and understands capital markets fairly well. He said that at presently, about 1/3 of publicly listed U.S. companies don't earn enough to cover current interest costs in a rising interest rate environment. I don't know exactly how he defines rising. I doubt it's 25 basis points. Maybe he's thinking a little bit more than that. But I was concerned about that because your overlay comments about the durability of the markets, it's because they've always been connected to the actual performance of corporate America. So, you know, all the rest ends up being noise. But that was a bit disconcerting. And I imagine the same is true of private assets in the private equity world. And there are more private companies than there are public companies. It's a little bit more opaque, but I bet they borrow a lot more heavily in their model. So do you have any visibility into this statement that someone shared with me, if it's accurate?
Yeah, no, thank you. I've not seen that particular statistic. So I will go back and look for it.
Okay.
Now, and I think it's very plausible because in a rising interest rate environment, of course, it's just going to be much harder to issue debt and to service debt, especially if it's adjustable rate. So I will go back and take a look at that, and I will hopefully have an answer for you at the next IC.
Okay, terrific.
Just on, if I can elaborate on just the earnings, on the earnings question. Despite the market being down 24%, and this is just my perception, there still seems to be some optimism out there that, you know, we will avoid a recession. If we have a recession, it will be shallow and so on. It's very hard to predict the future, but I'm assuming that there will be demand destruction. And, you know, for multiple reasons. One is, you know, just people looking at their 401k statements and getting shocked, you know, when they come in early July. And secondly, just with inflation and with gas prices. So I think, and 2/3 of the US economy is consumer spending. So I think when that optimism fades away, when reality sets in, I think that will have an impact on corporate earnings. Now, how much of it is priced into the market is hard to tell. And this is a theme that we will again stress at next week's IC, is now the solutions that we have proposed don't involve forecasting, and forecasting is so difficult, but do involve, you know, in 2 ways. One set of options take advantage of market drops, and actually, you know, we have some suggestion on how to re-risk the portfolio as the market keeps dropping down. And another set of options will be how to hedge the portfolio against very severe drawdowns. We've already had a severe drawdown of 24% in the S&P, but if the S&P does go drawdown, you know, 35, 40%, can we actually protect the portfolio? And those are some solutions that we will discuss next week.
Thank you.
Anybody else?
I think it's important to remember that we are investors and that we're not trying to manage the next year. We're trying to manage the next 30. And over the long haul, we have to reinvest it, and, you know, we'll recover through this.
Yes, thank you, Trustee Kelleher. That's exactly right. That's the way we feel about it. The advantage we have over as an institution, as an institutional investor, over retail investors is that our time horizon is almost infinite, and we have the capacity to take on volatility. And in the long run, risk assets, being long risk assets, should pay off. And as the market comes down, I view these as opportunities. Chaos always produces opportunity, and we should be able to take advantage of those opportunities.
And we also have the funding to pay our in-pay retirees over the next 5 years. So we keep that reserved, right?
Are not at risk.
Right.
Yes, good point, Trustee Jennings. We did set up that immunized cash flow bucket three years ago, and we do have 5 years of reserve.
Yeah. Just for anybody listening that might be worried about their pay. Okay. Any other questions? Comments? All right. So shall we move forward with 3A for the presentation report by Norberg Berman?
Yes, thank you, Trustee Jennings. So for 3B, I would like to invite Casey Boyer from Neuberger Berman.
Okay.
Hi all, thanks for having me. I'm Casey Boyer. I'm going to take a minute just to share my screen. If the host, I'm actually disabled from sharing my screen. I don't know if the host can change that.
I'll get that up for you just a sec.
Okay, thank you.
And she's ready now, huh?
Okay, perfect. Let me get to sharing. Okay, great. So again, thank you for having me. I always appreciate being able to come quarterly and give you guys the update. I'm actually presenting Q4, so I know a lot has happened since Q4. And I will try to talk through some of that also, what's happened and kind of what we anticipate for Q1 and moving forward. Still talking about Q4, Q4 was a very good picture for us in the private equity world. So I'll start there and then move forward. So if you're kind of looking here on page 2, which is a good summary of both your legacy investments, the ones completed prior to the Neuberger partnership, and then the Neuberger strategic partnership in the middle, you'll see high-level investment statistics. One of the big drivers and important topics for Q4 was overall in private equity, and within your portfolio, we did see a lot of realizations. So between Q3 and Q4, we actually distributed to you all a little over $14 million, which is great. So you'll see now a total distributed back to the plan of $38.5 million. Post Q4, we've distributed an additional $4 million. So that happened in May. So you'll see that flow through the reports actually in Q2. But the performance in terms of net returns, your net multiple, very strong at a 2 times. That is up from last quarter, Q3, which was 1.9. And a nice IRR there of 36.9%. We continue to make commitments here and have been working with the team on that. So good Q4 performance. I would say looking forward, for Q1, our platform overall and kind of what we've seen within the private equity world is really for buyout funds, Q1 was pretty much par. Buyout funds were typically up around 5% all the way to down 5%. So a very kind of even par situation for buyout funds. Venture funds were down a little bit more. We found kind of the average performance for Q1 for venture funds down about 5% versus Q4. And obviously not terrible compared to kind of the volatility in the public markets. We've seen at an underlying basis portfolio company statistics and financials. We obviously do a lot of co-investments, so we're able to look at the deal flow that's currently in the market. We're still seeing quality companies. Financials are still good for companies, but there is a much bigger focus and importance on profitability of companies versus just the growth of companies, which kind of over the last few years has been more of the focus. So that's a very big topic of profitabilities of these companies that are being sold. Definitely, as I mentioned, deal flow and kind of just the unknown at the moment, I think is affecting deal flow and kind of what the future will hold. We don't know what valuations will look like for Q2 or Q3. And we'll, you know, we're not super bullish at the moment on kind of how the rest of the year will fare. But so far we don't have a good grasp on that.
So are you bearish?
I think we're waiting because at the moment, private markets always kind of lag the public markets. It's yet to be seen how much the companies will be affected. As I mentioned, financials still seem to be holding up. And that's why I think Q1 performance compared to the public markets is held up better. And while we do compare valuations to public markets, if the underlying portfolio companies are still performing, then it's not marked down quite as much. So we are cautious at the moment.
Thank you.
Yes. So let's move on, unless there's any kind of more questions around those topics. I'll kind of move more through here some of the Q4 performance. The next few pages go through benchmarking of the underlying funds within your portfolio. As you know, we benchmark both the IRR and the multiple of invested capital and comparing this to peers throughout the market. And you can see how these each investment has performed. And one thing I will add, and that you'll see on pages 4, 5, you'll see that we've added some arrows. And this is just to give you all a better idea of how these quartiles have moved between quarters. So if you see the red arrow, obviously that means since the previous quarter, the quartile has gone down. And the green arrow up means that quartile has moved up. And of course, you can kind of see over here what the actual performance was and how that compares to first quartile, median, and third quartile. On page 7, we highlight a little bit more of the underlying exposures within the portfolio, both on a committed basis as well as an invested capital basis. In terms of investment type, meaning primaries, co-investments, and secondaries, you'll notice the committed capital and obviously co-investments are deployed into companies immediately. So the invested capital amount looks slightly larger than the committed amount. As the primaries continue to call capital, invest into companies, you'll see that percentage increase and get closer to the committed amount. And then you'll see on the far right, not just Neuberger, but how that plays into the combined both Neuberger and legacy portfolios. You'll see at the bottom the vintage year and kind of the consistent continued deployment throughout vintage years and obviously starting in 2006, 2016, 2017 for Neuberger. Looking at page 8, just a little bit more digging into the performance of the Neuberger partnership. So on the top, you'll see gross performance broken out by primaries, secondaries, and co-investments. You'll notice some kind of key areas that are very almost predictable within these types of investments. So secondaries, you're obviously buying assets that are on the secondary market. So the anticipation is that those will have shorter hold periods, and you'll kind of see the realizations come back a little bit quicker. And in fact, you do see that secondaries have already distributed 1.2 times the invested capital on those. The co-investments have performed really well. Those are something that we focus on to really generate early strong returns in the portfolio, and we've been happy with how that part of the portfolio has continued to develop. We've seen a lot of, in 2021, saw a lot of great realizations within that portfolio. And then at the bottom, the performance benchmarking, similar to how we did the underlying that I was just talking through on the earlier pages. We also do the program overall. So you'll see the Q4 performance for the plan and how that compares to peers. Happy to report first quartile across both metrics as of Q4. And moving forward, this really is a lot of detail. So I won't go through this in detail, but this is the schedule of investments of each underlying investment, both Neuberger and legacy investments. You'll see at the bottom how the gross returns turn out for each one broken out, and then in total, so you can see really kind of what investments are producing their returns. And with that, I will pause and open it up for questions.
I have no questions.
Yeah, but I was about to say, Vice Chair Jennings, no questions from me either. Thank you to Casey.
Sorry, I'm muted.
Thank you to Casey for the presentation.
Yeah, thank you. Sorry.
Thanks for
No
having me.
questions? Okay. So now are you going to, now Makita is now going to do fourth quarter private markets.
That's right. Thank you, Trustee Jennings. And to address item 3C, I'd like to invite Laura Wyrick.
Thank you. One of the fun things about having small children is that they sometimes pass germs along to me, and I have an eye infection right now. So excuse the sunglasses, but I figured staring at sunglasses rather than just an empty screen would be preferable.
Oh, well, Laura, let me give you a tip. As a grandmother, they also pass colds on to us. So
Yes.
that's the recurring of mine. So
Yes,
it goes
mother
both
now
ways.
has many grandchildren and has developed an immune system of steel that I'm hoping lasts a bit longer. I'm sorry about your cold, and I hope you feel better soon.
Thank you. Same to you.
So,
I did want to say something, Laura.
Yes.
Trustee Horowitz or Chair Horowitz wanted me, since he's not here, to thank you for adding some new data points that he had requested to your quarterly presentation. Okay.
Oh, wonderful. Thank you.
Yes. Okay. Now I'll let you go. Go ahead.
All right. So I'm going to try to share my screen here. Can everyone see that?
Mm-hmm.
Yes.
Great. Okay, so I know that Ms. Boyer from Neuberger just went through some details on the private equity program. Here we have the full spectrum of private markets asset classes on page 2. So you can see here some strong numbers, a internal rate of return or dollar weighted return of just about 10%, 9.7 for the program as a whole, and about 1.5 times the money that you've paid in over time. So you can see that the real assets program has now captured some of the gains from energy recently and is now outperforming its public market equivalent, which is in the far right-hand column. And you see some strong absolute returns as well from the legacy private equity and private debt and real estate, all definitely positive, even the couple of asset classes that are slightly trailing that public market equivalent number. In the private debt program, which we'll start with, there was one new commitment this quarter, Arbor Lane 3. And you can see contributions and distributions on this page as well. And then taking a look at the individual funds in the private debt program, what I'd highlight is that you're seeing some very strong returns from the funds that were committed under the current staff. And more, more recent staff members. You can see if you look at Arbor Lane 2, an IRR of 24% relative to 10 for the peer IRR. Octagon, a 2018 fund, an IRR of 16.8 relative to 10.3 for the peer group. And Cross Ocean 3, which is a European debt fund, a 2019 vintage with an IRR of 20%. So while the total IRR of this program still suffers from some of the not great returns on the early investments that were over 10 years ago now, the more recent vintages have been quite strong. Taking a look at real assets in the next section here, you can see that there were 2 new commitments, Tembo and Mountain Capital, $6 million each, and you can see the contributions and distributions on the slide as well. And then in terms of individual funds, you can see that there are 3 funds that currently have meaningful performance. Kimmeridge Energy 5 has an IRR of almost 50%. So you are seeing some strong numbers come in, mainly from what we've seen in the energy markets recently, bringing the total program IRR to 12.2%. Looking ahead to real estate, there was 1 new real estate commitment during the quarter, HIG Realty 4 for $6 million. And you can see the individual real estate funds on page 16. And again, same story that some of these recent vintages, GEM and DRA, have had quite strong numbers. And so a lot of new promising data coming in from recent commitments. And then this report has a lot of other data as well. For the venture capital program, there were no new commitments. You can see that there are 3 funds total, none of which have meaningful performance yet, given that they're all 2021 funds, but all of them are now valued at over what has been committed or contributed so far. And then there's a lot of information on the market environment later on in this report, but in the interest of time, I'll leave it to you to look at those or ask me any questions if you're interested. And if you'd like, I can move on to public markets.
Are there any questions from the trustees? Okay, public, no.
Okay, wonderful. So as your CIO mentioned, a lot has happened since the end of March, but the last audited information that we have for reporting is as of March 31. A lot has changed economically as well with, the largest interest rate raise that we've seen in a long time, continual high energy prices and inflation. But I think we can illustrate on page 5, some trends that have continued. If you look at 2021 on the left, nearly every major asset class was positive during that year, led by riskier asset classes like equities and real estate investment trusts. And then if we look on the right at 2022 through April, these trends have really continued where you see commodities being one of the few, really the only public markets asset class that has had a positive return. Riskier asset classes like small cap stocks were the worst performer of major asset classes through April. We're not showing because there aren't as many publicly available indexes, but private markets is another area, like we just talked about, that still has positive returns. And so you'll see, one trend that we're seeing among funds that we work with is those folks that have significant private markets allocations have held up much better. Part of that is accounting and things not being valued as often. But part of that is also, the stress of retail traders in and out of the market hasn't negatively affected those companies at this point. So getting into your asset allocation, we have a slide. Let me get to it here. It's slide 31. You can see the total fund market value hovering just below $3 billion as of the end of March. And all asset classes quite close to their policy targets. If we look at total performance, while the quarter to date number here is negative, the first quarter of 2022, you can see that it's outperforming the low cost passive portfolio and ranks above the median of the peer group. The fiscal year to date performance as of the end of March was still positive, up 2.4%. And that fiscal year to date performance was outperforming every benchmark that you have. So you have the policy portfolio. It was about matching that. The investable benchmark portfolio, which is what you could do if you didn't have active decision making by an internal investment team. The low cost passive portfolio, and then if you look at the rank within the peer group in the top third for that fiscal year to date period, and then for the 1 year, as of March 31, there was still a return of almost 10%, and again outperforming every benchmark that we look at and ranking in the top 20% of the peer group. 3 years even stronger relative to benchmarks in the peer group as well. So, as we've discussed with being long-term investors, we can still, I think, take some solace in those longer-term numbers at this point. And if you look at individual asset classes, most asset classes held up quite well. You see growth up for the year, up almost 12% relative to 7.5 for the growth benchmark. And then other asset classes that were negative, for example, emerging markets equity, were not as negative as their benchmarks and the peer group. And on this slide, about in the middle, you can see the private markets returns. Private markets, excluding the assets that are held in the Russell 3000 for future commitments, were up almost 50% for the trailing 1 year period. We see strong returns across all private markets asset classes and some diversification benefit from asset classes like, say, emerging market debt relative to traditional bonds, which were down recently. In terms of individual managers, manager selection continues to be quite strong in the since inception periods. I'd highlight, Cove Street is one that's been stressed historically in the top decile for the quarter period. So, some managers that, have looked not great for a period of time are providing some diversification benefit now in this market. Another one that I'd highlight would be Dimensional Emerging Markets Equity, the second from the bottom here, positive, even though emerging markets were down overwhelmingly for the most recent quarter. And so some of these managers that have been out of favor for some time, but your investment team has held on to, now are providing some nice diversification benefit. I will move on to a few broader measures. When we look at attribution of the total fund for the 1 year period, you can see that manager selection, that green bar, has been really positive. Allocation effect was positive as well. And when we look at the 3-year period on the next slide, again, you see manager selection just overwhelmingly adding a lot of value to the fund. When you see things like a negative allocation effect, part of that for the 3-year period was just holding some cash sort of transitionally as you move between asset classes. And given the markets were up over the 3-year period, holding any cash tended to be negative. And then when we look at other measures like, say, the Sharpe ratio, and these slides show the annualized return relative to the peer group in the left column, the annualized volatility in the second column, and then the Sharpe ratio, which is a measure of risk-adjusted return, in the third. And so you want a higher Sharpe ratio, meaning, you know, higher return and or lower volatility than the peer group. And you have that over the 1-year period, you have it over the 3-year period, and then you also still have the high ranking Sharpe ratio or risk-adjusted return over the 5-year period. I'll just wrap up my comments with a peer relative look here. You see for all time periods up until 5 years, you know, well above median returns for your fund. So, you know, strong peer relative marks recently as well. So I'm happy to answer any questions on that summary of total fund performance for the pension.
Okay, so maybe a takeaway is that even though right now we're in a bear market and we see all these negatives, the long haul, even like 3 years out, is still positive, and the health of the pension is positive and doing better than peer. Is that correct?
I think that's very accurate, yes.
Okay. Any questions from the trustees? Any questions from the public? Okay, sounds good. Thank you. So let's see, that was
3D.
That was 3D. Okay, so now 3E is did we do 3E? Oh, no, the healthcare trust. Okay. First quarter by Makita.
Okay, great. So the healthcare trust, as you know, is invested in sort of a liquid subset of the same managers that the pension is. I will look at asset allocation first on page 29. You can see that the total market value as of the end of March was 386 million, and the current allocations were quite close to policy. Looking at total fund performance, you see a negative return for the quarter, down 3.2%. That was slightly behind the policy benchmark, but still ranked around the top third of the peer group. For the fiscal year to date, the fund was down 0.7% as of the end of March, still ranking in the top third of that peer group. And then for the 1-year period, a return of 3.7. Still quite strong annualized returns over the 3-year period of 8.1%. So one thing that's been interesting is that, you know, typically in down markets, this fund has been below peers, mainly because it's a little bit more equity heavy than a lot of other health and welfare trusts, giving the target return that we're trying to reach on an actuarial basis. But this fund actually protected quite well relative to peers. And a big reason for that has been the other asset class. So a lot of health and welfare funds don't have things like core real estate and commodities in their portfolios. But this fund has some diversification outside of sort of a plain equity bond allocation. And when you see a market environment like we have now, where equities and bonds have been quite highly correlated in their downward trend, you see a lot of protection from these other asset classes. So that diversification has been quite helpful to this fund. In terms of core real estate, returning 19% for the fiscal year to date nearly, and commodities up nearly 25% for the fiscal year to date period. So in terms of the individual managers, you have a subset of what you have in the pension portfolio, and then a lot of index funds. But here's the core real estate portfolio here, which has been a big help, and commodities as well. So I won't go into too much detail here, given the similar positioning to the pension, but I'm happy to take any questions.
Okay, are there any questions from trustees? Any
I
questions?
have a quick
Yeah.
one. With respect to page 34, could you just remind me again, what was the other benchmark? I don't see it footnoted, or is it
Yes, I
in the
can tell
back?
you exactly.
Somewhere
Yeah,
in the way in the back?
We have
I
a
had
nice
asked this
chart.
before. Okay, there it is.
We have some very small print in the back. So the other benchmark, it's basically a blend of what you have in your other asset class.
Thank you for the
So
refresher.
Yeah, so it's bonds, long-term bonds, a core real estate benchmark, and the Bloomberg Commodity Index.
Yeah, that's fine. I just didn't see the footnote in 34. And I just spaced out.
Yeah, we used to have it on every page, which is nice, but it ran
got
too
messy.
long, so
I'm
moved it to the
remembering.
back.
Thank you.
Trustee Basti, I see your hands raised.
Yeah, I just have one question. You know, every decision in the past has been different, right? So this one, I mean, if it comes with more of an inflation-induced recession, so I'm wondering if there's any kind of scenario that we have run and to simulate the swing that can happen in the portfolio for an inflation-induced recession.
Yes, we have. So we go through the asset allocation process and review process annually, and that usually happens around April or a bit before with the investment committee. And so there's a lot of different types of analysis that we look at. We look at historical scenario analysis as well as forward-looking stress testing. You know, some of the scenarios include high inflation or a stagflationary environment with low growth and high inflation. So it's when we look at the different asset allocation options with the investment committee and the investment team and then the board, we model as best we can a lot of different potential scenarios. And that's really how we did end up with commodities specifically in this fund, was looking at, you know, commodities haven't necessarily had great returns over the long term, but they can really protect in high inflation environments like they have here.
Thank you.
Okay, any other questions, comments from the public? No. Okay, sounds good. So thank you very much.
Thank you.
For the very complete presentation in these times. So item number 4, old business deferred, there is none. So we will move on to new business. And oral update from the CEO, Mr. Pena, do you want to take over?
Yes, thank you, Madam Chair. Good morning, everyone again. I'll be quick this morning. I wanted to start by letting you board know that last Friday, in 95-degree weather in the early afternoon, the staff actually celebrated their first outdoor summer picnic in 3 years because of the pandemic. Obviously, because we still, through the COVID-19 pandemic, we didn't have 100% attendance, but we did have quite a few members of the staff. It was very well attended and good barbecue. I was only there for part of it because I hurt my back earlier in the week. But I wanted to publicly thank the committee that put together the picnic. It was very well done. We kept social distance, and again, it was very well attended, and it was nice to see staff in person, some of which I really haven't seen in about 2 or 3 years, to be quite honest with you. And so we shared some time together. We provided last year's and this year directors awards, which is a recognition that we give to staff for exemplary work beyond their call of duty. And as I do from time to time at your public board meetings, and I will do that again this morning, I thank them for their hard work and their commitment and engagement to their job and to the plans and responsibilities while working remotely through this COVID-19 pandemic. So again, thank you for staff for keeping us afloat and getting the job done. In terms of staff, I wanted to let you know that we're conducting the interviews this week for an accounting clerk position. I also wanted to let you know that we are very sad to learn that our health analyst, Bessie Olano, who's been with us for quite a few years, is actually leaving us. She's pursuing a job outside the city. And so we hate to see her go. It's going to be a big hole to fill in the healthcare area. And we wish Bessie nothing but the best. And we thank her for her years of work and support with ORS.
How long has she been with ORS?
I'm going to say more than 5 years for sure. Barbara, do you have that information?
Right, 7 years.
7 years. So she's vested.
Yes, yes. And I believe she's leaving for another public agency in California. So she is going to be able to establish reciprocity.
That's good. But no dental.
Yes, we learned that. So also we're kicking off some recruitment activities in the next within the next few weeks, not only in regards to some benefit analyst positions currently available, but also in regards to the 3 newly budgeted positions for the benefits area. So we're going to be quite busy the next 60 days or so, kicking off these processes and searching and doing due diligence and conducting interviews, because we certainly want to fill these positions as soon as possible.
Is it an analyst position?
Yeah, there are. So there are 2 analyst positions, and I also, you may recall that at the budget level, we requested an analyst, a senior benefit analyst, and a senior supervisor as well. So yes, we are going to be quite busy.
There was a citywide recruitment for analysts, so
Yes.
you can pull from that. Yeah.
That's right. We are going to be working with the city on that process. I also wanted to let you know that the city updated the COVID guidelines to incorporate updated county guidelines required on quarantine for close contacts. And so regardless of vaccination status, they're no longer required to quarantine as long as they're not experiencing any symptoms. And I think I mentioned before that the city is requiring now masks when you are in a city facility, and also obviously also for staff when they're in our office. We continue at the Office of Retirement Services working hybrid 2 days a week. We have staff coming to the office. Our offices are open between the time of about 9 to 4 o'clock. So it's open to members, although we do strongly encourage members to make appointments if they're visiting our offices. Again, mask as required. And lastly, I wanted to let you know that we will be closed next Monday in observance of the Juneteenth day, and also on the July 4th in observance of Independence Day. That concludes my update, Madam Chair. I'm happy to, and the city, I believe, you may correct me if I'm mistaken, Vice Chair Jennings, the city did approve their budget for the coming fiscal year at the meeting yesterday. That concludes comments, Madam Chair. I'm happy to answer any questions. Oh, one more, otherwise Linda will get mad at me. I just want to remind everyone now that we are seeing some of you traveling for conferences, to remind you politely to reach out to administrative staff when you're planning to attend a conference on behalf of the plan, so that they can make the arrangements, on a registration for the conference, and hotel accommodations, and per diem, and plane tickets if they're required as well. So just a reminder that if you're thinking about attending some conference or training on behalf of the plan, to reach out to our administrative staff. Now that does conclude my comments, Madam Chair. Thank you.
Are there any questions from the trustees?
None from Trustee Kelleher.
Any comments from the public? Okay, We move on to oral update from the city council liaison to the board. Oh, wait a minute, they're not here. Yeah. Councilmember Davis is not in attendance, so there will be no comment from her. So now we move on to item C. And this is discussion and action on authorizing the CEO to negotiate and execute a Fourth Amendment to the agreement with MedLink, independent medical examiner for application examinations, to amend the rate schedule, to amend the rates from 500 per hour to a maximum of 850 an hour. I will turn that over to Ms. Hayden.
Barbara, yes, thank you, Madam Chair, or Vice Chair. So this is, MedLink is one of the two vendors used to perform independent medical examinations for Federated disability retirement applicants. Item 5D on today's agenda item is also seeking a similar action for the other IME vendor, ExamWorks. MedLink rates have not increased since the onset of the contract in February 2016, and the current MedLink contract authorizes rates of 500 per hour for files over 2 inches of records, which is the typical used for ORS files. Recently, we were advised by MedLink that they'd revised their schedules. Rates are now based on rate sheets for individual doctors as opposed to the size of the file, and rates are ranging from 650 per hour to 850 per hour. I should also mention that when we were notified of the proposed rate, staff had discussions with both of the IME vendors to endeavour to get the best rates on offer prior to taking this item to the board. And so we're seeking approval for this amendment to amend the rates from 500 per hour to a maximum of 850 per hour.
And this will last for how long? How many years?
This contract, I
assume it's more than just a year, right?
Oh, yes, it is more than just a year. Yes.
The term, I guess, is what I'm going after.
So
It's the agreement goes to 2025, but we're just making an amendment to the rate calculation methodology. That's the right way to think about it?
Yeah, the rates that the doctors are charging.
Yeah.
But the methodology is changing, right? We're going from, I guess, that records.
Yeah, the size of the file.
To a per hour per doctor.
Yes.
And is that, I guess my question, I don't know if we were open to questions yet, if there was more comments.
No, go ahead.
But I'll ask anyway.
Yeah.
Is this something that is fundamentally changing within the IME sphere? Or just, is this firm specific, do you think?
No, MedLink, they were the only vendor that charges per on a sizing of the file. The other vendor does always use rate sheets. So this is just in line with that rate sheet methodology. And as I said, the other IME vendor is also increasing their rates. And that's the next item on this board agenda.
Understood, yeah. So it's not wildly new to us. Thank you, much appreciated.
Did I hear correctly, $850 an hour?
Yes.
How is that justifiable?
Occupational medicine and psychology were two of the disciplines that we see charging an 850.
Because there's inflation, Mark.
I don't think it's terrible.
And actually,
I don't feel it's terribly out of line if you think about things like counseling and therapy in the Bay Area, particularly. That's $700 as a not a direct apples to apples, but it's not as shocking as you'd think.
Yeah, and actually the maximum rate, which is that 850, it's not changing. It's staying as is. It's more the lower rate.
Wow.
I have a question.
Yes, Trustee Avasti.
do we have other IMEs, like other than IME and the next one that you're going to take exam works? And if you have, then how is it going to impact the fee structure for any other IMEs that you have?
We have the two IMEs. Currently, we're contracted with the two. And what was your other?
Yeah, so they only these one getting yeah. And the increase in rate, it does not impact the not to exceed budget amounts, right?
That's correct.
Yeah, we couldn't keep the doctor position filled, so we went out to this type of service, and now we use them. That's part of the history, as I remember it. Barbara, you can correct me if I'm wrong, but so I just think it's interesting per inch, right?
Let me just interact here, Barbara, if I'm mistaken, please correct me. So there, I want to separate the discussion between the board medical advisor, which is the advisor to the committee and your board, vis-a-vis the IMEs. These are internal medical examiners, which we have been using all along.
Oh, okay.
And I think when we went out, when we lost our last board medical advisor, and we were having trouble finding vendors to apply for our request, in my comments to the boards, I mentioned it wouldn't be unthinkable that you move ahead this process without a board medical advisor and just rely on the independent medical examiners analysis to make decisions. As it turned out, we did find a vendor to provide the board medical advisor services. And now how that works is that they are not, the board medical advisor will not be performing an actual examination of the member. They will draft a analysis for your board based on all the medical records, including the independent medical examiner review and examination of the member. So that's how that works. And for Trustee Avasti, many years ago, and every so often we do a review and seek out services for the disability process, which include independent medical examiners. And these two, MedLink and ExamWorks, are also used by some others of our peers throughout the state. And so they actually have been on board. I don't recall the specifics, but it's been more than 5 years that they have been working with us. So hopefully this sort of provide the basis for it and paints a basic picture of how this works. But if there are any other questions, please let us know.
Are there any other questions from the board? Are there any questions from the public? Okay, may I have a motion to accept this item?
Trustee Chandra also motion.
Okay. And may I have a second?
Trustee Keller, so motions.
Okay. All right, so we'll have a roll call vote. Trustee Chandra?
Aye.
Trustee Orr?
Aye.
Trustee Kelleher?
Aye.
Trustee Linder?
Aye.
Trustee Avasti?
Aye.
And I also vote aye. So this motion carries unanimously. And now we will move on to the next item, which is, let me get it, sorry. Is item D. So 5D. Discussion and action on authorizing the CEO to negotiate and execute a second amendment to the agreement with ExamWorks, an independent medical examiner for disability retirement application in examinations, to amend the rates from a maximum of 700 per hour to a maximum of 850 per hour. I believe this is similar to the one we just did, but with a different vendor. Barbara, do you want to take on?
Yes, thanks, Madam Chair, Vice Chair. Yes, this is ExamWorks, one of the two vendors used to perform the independent medical examinations for Federated disability retirement applicants. ExamWorks rates also have not increased since the onset of the contract back in 2016. The current contract authorizes rates up to 700 per hour, and this has been increased up to 850 per hour. And so we are requesting approval from the board to authorize the CEO to negotiate and execute an agreement to increase that maximum rate to 850 per hour.
Okay, are there any questions or comments from the trustees? Any from the public? Nope. Do I have a motion to accept this?
Trustee Linder, so moved.
Okay, do I have a second?
I second.
Okay, trustee Abasti seconds. So roll call vote. Trustee Chandra?
Aye.
Trustee Orr?
Aye.
Trustee Kelleher?
Aye.
Trustee Linder?
Aye.
Trustee Abasti?
Aye.
And I also vote aye. This motion carries unanimously. All right, and so now we move on to item 5E, which is to authorize expenditure of funds for work health solutions after June 30th, 2022, and which is within the approved budget. I will provide to Barbara again. Ms.
Yes,
Haynes?
so Work Health Solutions provides the medical board advisor services to assist with these disabilities review. And earlier this year, the board authorized the CEO to negotiate and execute an agreement with Work Health Solution. And it was to not exceed 100,000 to provide disability medical evaluation services. The initial term of the agreement was for a period from November 22nd, 2021 through to June 30th, 2022. The wording of the approval included when the approval was given, the wording was for the CEO to negotiate and execute an agreement with Work Health Solutions to provide disability medical evaluation services to the board for an amount not to exceed 100,000 for fiscal year 2021-22, with 2 one-year extensions, options to extend beyond the June 30th. And so due to the wording of the original approval, Reed Smith advised that staff should request Board of Approval to authorize expenditure of funds for Work Health Solutions after June 30th, 2022. And so that is why this item is in front of the board today.
Let me, before there are any questions, let me just add some comments to Barbara's explanation. So it's actually twofold. Barbara, again, if I'm mistaken, please correct me. The current contract does allow for month-to-month basis for the services. Is that correct?
That's correct, yes.
Okay. And number two, the reality is that the onboarding of the Work Health Solutions was more challenging and it took longer than anticipated. And so we really didn't get to work with Work Health Solutions on the actual services for board medical advisor much over the last few months. And so we really have no experience or no knowledge of their services at this point. We are going to be forthcoming to the committee and the board in the near future with the first few analysis. And so what we are suggesting as well is that as staff, we're calling on that month to month to allow us. I'm thinking right now, possibly for the first half of the coming fiscal year, from July 1st to December 31st, enough time for us to get a good experience working with her solutions and decide whether or not we want to come before you board to request an extension, those 2 one-year extensions for the contract. So I just wanted to make that point clear. What we're going to be doing, this is just only asking your approval for allowing us to use the funds that were authorized in the upcoming fiscal year. We're not requesting approval of the one-year extension. We are instead taking advantage of the month-to-month until we get enough experience on our hands, on our belt, to decide whether this is something that we want to continue working with Work Health Solutions or not. I just want to make sure that was clear to the board. Barbara, is there anything else that you'd like to add to that?
And the only thing being there's no additional compensation beyond the initial 100,000 being requested.
Correct. Thank you.
Okay, so are there any questions from the trustees?
Just ask for clarification. The agreement is November to June, and it's $100,000 in total value, correct?
Yes. There's
so month to month is just going to be some pro rata of that.
We haven't actually used very much of the funds at all of those 100,000 because we haven't got into the full life cycle of the services for any case yet. So we haven't used very much of the 100,000.
So you have this other budget to apply to your payments, and you're seeking approval for release of that?
Yeah, it's just to expand, to incur expenditures beyond June 30th, 2022.
Okay. Any other comments or questions from trustees? No. Any from the public? No. Do I have a motion to accept?
Trustee Linder, move approval.
Okay. Do I have a second?
I
think that's Trustee Chandra. Are you trying to accept or second? Is that a yes? Trustee Chandra?
Are you, sorry, did you, I'm having audio problems. Did you ask for my vote?
No, I was just asking if you're seconding. I thought you were, but.
Oh, I'm happy to second.
Okay.
If you need a second, I second.
All right.
I apologize
so
about audio problems.
I will do a roll call vote. Trustee Chandra?
Aye.
Trustee Orr?
Aye.
Trustee Kelleher?
Aye.
Trustee Linder?
Aye.
Trustee Avasti?
Aye.
And I also vote aye, so this motion carries unanimously. Okay, so one more item on 5, that's the discussion and action on factual findings. Oh, here we go. All right. So this is for use of California Assembly Bill 361, abbreviated teleconferencing procedures. And I think this is being done by Council Chin. Is that right?
That's correct.
Okay.
So with your backup materials, we've provided you evidence that will allow this board to adopt 2 factual findings that will allow it to meet virtually under AB 361's teleconferencing procedures. And as of today, both these items are still in effect, which are one, the governor's proclamation for the state of emergency due to the COVID-19 pandemic, and 2, the city council's recent resolution for social distancing remains in effect. If this board adopts these 2 factual findings by majority vote, that it may continue to meet virtually for the next 30 days. Go ahead.
Oh, no, I was just coughing, sorry.
I'm done with my comments there, Vice Chair Jennings.
Okay, do we have a motion? Oh, wait a minute. Do we have any comments from trustees?
I don't have any comments. I just have a question for Council Chin. Any updates on how we heard from the governor, the state? I'm sorry, did you mention something and I just missed it?
No, well, in terms of your first question, the governor, there are rumors that the governor may intend to lift the proclamation at the end of July, but that remains to be seen. As you'll know, throughout the state of California, there's been a surge of COVID cases, so that may change. That rumor, so to speak, I heard amongst the other Caliper attorneys at their last attorney roundtable conference about a month ago, but that has since may have changed. But for now, we stay the course if we so choose.
And the city did approve their, whatever you want to call it, proclamation. I think not this meeting, but the prior meeting first in June. So I don't know how long that lasts, but they did do that.
Yes, they did. And so the current resolution with the city council is set for renewal or expiration on June 24th.
Okay.
Okay, do I have a motion to accept this?
Trustee Kelleher so motions.
Do I have a second?
Second.
I second.
Okay, I'll take trustee Orr. I think she.
Yeah, Trustee Avaste, you're gonna have to be quicker.
Okay, so let's do a roll call vote. Trustee Chandra.
Aye.
Trustee Orr.
Aye.
Trustee Kelleher.
Aye.
Trustee Linder.
Aye.
Trustee Avasti.
Aye.
And I also vote aye. This motion carries unanimously. All right, so you know, I've kind of.
Madam Vice Chair, I just wanted to comment to the trustees. I don't recall if staff has reached out, but because July is a dark, quiet month and we don't have meetings, we are going to have to be reaching out to you for special meetings of your board and committees sometime in July, but at a date that is within 30 days of your August meeting, so that we could have the ability to have another remote meeting in August, assuming that they lift the proclamation late in July and allow us to do that. I just wanted to let you know, so be in the lookout, because there's going to be some information. We may have to have 2 meetings, because between today and August is almost July, August, 60 days. So I don't know if we may have to have 2 special meetings or not. We will have to take a look at the options. We're going to have to count days and see what the state is doing in terms of the proclamation. I will keep you posted. Thank you.
Sounds good. Thank you. I appreciate that. So we've kind of gone through this pretty fast, and I kind of missed the break time, but if you want to, we're now into the committee's reports, and this tends to go fairly fast, if I'm correct, right?
Correct.
Yeah, I would suggest proceeding if everyone else is comfortable.
Okay. I would suggest so too. Also, since the first one is the investment committee, and I know Trustee Chandra is going to leave soon. I think he's driving to where he's going. So should we do an oral update from Trustee Chandra, who is chair of the investment committee?
Sure. I think substantively, the entire board got some key public market and private market updates today, as well as some timely comments from CIO. We will be meeting next week in a special meeting just to discuss the state of the market. And I remind all trustees, we make no substantive investment decisions there. They all come back to you. So we will keep you apprised.
Okay. And I don't think there's any motions on any of this, so I just keep on going. Yeah. Okay. On the governance committee, I am the chair here. I don't believe we have any new updates. We've just been meeting to, we have minutes, but they pretty much been just to continue with the remote reporting or AB, whatever we call it. I'm blanking on this one. But so no, I have no new changes. How about the audit committee?
Oh, Vice Chair Jennings, for the record, please state that we receive and file the minutes.
Okay. So for the record, we have received and filed both the minutes for April 11th and April 21st. Trustee Kelleher, Audit Committee.
Yeah, so I have to admit, I am flying a little bit blind with the iPhone. And so I am not aware of any real pending issues with the audit committee. We're going on with the Grant Thornton review, but Trustee or Vice Chair Jennings, do you have any?
I can add that we have received and filed the minutes for April 14th, April 21st, May 19th. There's a lot. February 7th. Pardon?
Thank you.
Yeah, okay, you're welcome. Yes.
No, I was just going to add besides, well, I'm sorry, I apologize. Did you complete accepting the minutes as needed?
I got one more.
Okay, go ahead.
February 17th. I believe that's it for the audit committee. Just noting that we have received and filed these minutes. Yeah. Okay. And then it's the quarterly travel and attendance for Federated, received and filed. That for January 11th through March 22nd. There is an update on the city auditor's recommendation to ORS that we received and filed that, which was on February 9th, 2022. Then discussion on the audit plan by Grant Thornton, which Trustee Kelleher was talking about. That was the audit plan, received, filed. And
Madam Vice Chair, so that one was the one that I wanted to key in. The audit committee received the presentation by Grant Thornton. Actually, did take action to approve it, and I think we need your board now to then, if you have any
discussion and action
to answer them, but also based on the recommendation by your committee to also approve the audit plan by Grant Thornton for the upcoming fiscal year 21-22 financial audit.
Okay, do we need to show that to anybody, or should we have someone talk about it, or?
I know that discussion took place at the committee level and the committee took action. So we're here happy to answer any specific questions, whether it's by the public or by the board members.
Are there any questions or comments from trustees regarding Grant Thornton's audit plan? No. Any from the public? Oh, wait a minute, I hear someone.
Just
Trustee
one comment.
Avasti?
I'm not able to open the link.
Maybe
the link of the.
Someone go to, I believe that's in the agenda, so can someone open that for her? It's item 6H, I believe. Is someone from, is Marty, are you gonna be able to do that for us?
I think they're trying to open it, and I think as
Okay.
Trustee Astrid
Sounds-
indicated, she had trouble. Apparently staff is also having the same trouble. Is that the case, Marty, Linda, Michelle?
I'm going to share my screen, just a moment.
Yeah, and as far as the link goes, we'll go ahead and check on that after this meeting and make sure all the links are working. Apologies, Trustee Avasti.
All the attachments work. in
Yeah,
the-
I was able to open
in the
it.
system.
But Trustee
That's helpful.
Avasti, do you have your iPad?
Not yet, but I think it's the same presentation that was given last time.
Yes, it is the presentation that was given at the committee
Yes.
level.
Yeah, I have it.
Okay, cool. All right. So.
Excuse me, Vice Chair. Trustee Avasti's iPad will be delivered today via UPS.
Oh, excellent. Thank you.
Thank you, Linda.
Okay. So any questions or comments from the trustees on this? How about from the public? Okay, do I have a motion to accept? the audit
So
plan?
motion.
Do I have a second?
Second.
Okay. So let's do a roll call vote. Let's see. Okay. Trustee Chandra,
Aye.
Trustee Orr,
Aye.
Trustee Keller,
Aye.
Trustee Linder,
Aye.
Trustee Avasti.
Aye.
I also vote aye. So this motion carries unanimously. And to finalize, we have also received and filed the reconciliation audit from the internal auditor, Human Messina. So I don't think we have to motion on that one. So now to continue on 6.4, the Joint Personal Committee, an oral update from the chair, Trustee Orr.
Yeah, our last meeting was quite a while ago. We're looking to schedule another one coming up. There's a compensation study and the performance evaluation exercise to go through with a consultant. So once we have another meeting, more material updates will be available to share.
Okay.
That's it.
All right. And then there's the item 7 is the education and training. The Cortex report, again, is available to be reviewed. Proposed agenda items. I guess, are there any proposed agenda items for our next agenda? Anybody? Any trustees? Public? Nope. Okay. So guess what? We're done. Adjournment.
Very good. Well done, Madam Chair. Thank you.
Well done.
Yes, well done.
Well done, Vice Chair.
Yeah, Vice Chair, I will second that adjournment.
Yeah.
Now we
Thank
still
you.
need to stay on board